Hey, everybody, Economic Ninja here. I hope you're doing well. You need to be aware of what's happening in the Treasury market. And if you're not investing in bonds, even if you're not in the stock market, it's very important for all Americans to understand what's going on in Treasuries. The reason why is because interest rates are what have produced what you see around you in the economy. All right. Everywhere you touch, whether it be your car financing, home prices, price of food, price of fuel, it all comes down to the interest rate, especially on one that I'm watching right now, the 10-year bond. It actually controls where the economy goes and which direction the economy or the country is headed. And the reason why is because the higher it goes, the more it costs to borrow money, and that trickles down to even non-investors at the grocery store. All right. Now, the Federal Reserve was just known for making this massive rate cut of 50 basis points. And it's massive, not because it's big in comparison to historical means during crisis, but it's a lot more than 25 basis points, meaning there's something going on. There's smoke, and where there's smoke, there's fire. All right. So check this out. The news story out of CNBC says Treasury yields rise as investors weigh economic geopolitical outlook. Now, let me explain something. Something happened that was not good. Now, home prices are already falling, just like I warned about a year and a half, 2 years ago to get ready for this. It's already going. As a matter of fact, I just saw a place that I want to buy that was just lowered 32% from its peak during COVID. It's all-time high, now 32% lower, and that's in one of the greatest places to live in the country, I believe. But my point being is that things are bad and they're actually getting worse, okay? Home sales have stalled all across the country, even when interest rates on a 30-year fix went from 7.5 to like 6.5, something like that, maybe 6.25. There's a lot of stuff hidden there, okay? And we're going to talk not just about mortgages and houses, but when house prices fall, so does the economy, okay? Because that's the greatest wealth effect in our nation. So check this out. When the Fed dropped rates 50 basis points, you know what a bunch of bond traders did? They actually took their money from bonds, sold some bonds, and went over and invested in all kinds of different asset classes, whether that be stocks, gold, or Bitcoin. It actually caused sort of a vacuum or less people wanting to or willing to buy bonds. So the yields rose, right? Because as bonds, people want to put out bonds, which are debt, issue debt, right? They have to, if there's not enough buyers, they have to offer higher rates of interest or a rate of return for that money. So what happened as the Fed lowered rates and all these people that want to buy homes or refinance their homes or buy a car, they're like, yeah, and it actually wasn't good. Rates actually went up. All right. So this is a problem. Okay. So check this out. Treasury yields were light higher on Wednesday as investors considered the state of the US economy and eyed the latest developments in the Middle East. The 10-year Treasury yield added 4 basis points to 3.783. Now, since the writing of this story, it's actually, I believe, at 3.9, much higher. The yield on the 2-year Treasury was less than 2 basis points higher at 3.6. So it says here investors parse through fresh economic or economy data, should be economic data, as they assess the state of the economy in the US. ADP data released Wednesday reflected stronger than expected private payroll growth in September. Now, you know that I'm on record saying that I believe that this payroll report that came out and the 2 prior month revisions that they revised up are a 100% lie from the government. And the reason why is that the government, our current administration, is pressuring. This is what I believe is going to come out. They are pressuring these agencies to put higher numbers so that they can get better jumps in the polls before the voting. This is serious. You need to understand this. Even Mark Zuckerberg came out just recently and said, yeah, I was pressured by the Biden administration to censor people on Facebook. Think about that. As a matter of fact, the Biden administration has been fighting for the right to be able to go, and they won it back. It was taken from them. They had the right taken from them to go in and intervene and dive into social media companies and put pressure on them. They now have that right again. This is scary stuff. And when you start realizing that, you start to think, if you can start thinking like an investor, a true wise investor doesn't just look at the ticker on the stock market and see the numbers and get all excited. They look way outside of what's going on with the economy and what factors can influence the economy, not today, but tomorrow, next week, next year. Okay. Very important to understand how to think. You need to think like a fox. All right. Now, it says that this data comes before the all important September jobs report from the US. Well, this story outdated it by a day. Okay. And the reason why I'm telling you this is because I want to put all of this together, what the media is trying to show you, what's actually happening. Okay. It says Fed Chairman Jerome Powell earlier in this week indicated two more rate cuts in the 25 basis point. Now, the reason why that is because he came under so much fire for the 50-point basis cut, and everyone in Wall Street started to go, whoa, wait a minute, what's going wrong? If all of a sudden we were expecting 25, why'd you do 50? So he came out and retracted real quick and said, hey, the next ones aren't going to be as strong, just so you know. But in the time that he put the 50 basis point cut, he was talking about how great the economy is. So just so you know, there's never been a time in history, except for right before election, it's happened about 4 times since 1972, where the Fed has actually lowered rates when things were they were saying are good. It's because it was a lie. That's just a straight up lie. The Fed lowers rates when things are bad. Okay, I want you to remind you that when the dot-com crash happened, the Fed funds rate was much higher. And then it was plummeted over a series, let's see, a time period of, I want to say it happened over a year and a half. It went to 20, or so was it 50 basis points? I don't remember, but it was low. They tanked it, right? Maybe it was even higher than that. It was higher. It was like 1.75, 2%. If my memory serves me, okay, I don't got a teleprompter in front and I don't look that, bright like everybody with fancy editing. So they look really smart, but really they don't have a background in this. Anyway, that's a secret. My point being is this. After the buildup and the rise of interest rates in the 2004, 2005 range, when we had the Great Recession, even prior to that, and I want you to remember, every single time a recession is announced, the Federal Reserve, for 1 to 2 quarters, maybe even 3 quarters prior to the official recession, guess what the Fed was doing? They were dropping interest rates fast. And that's the same thing that happened in 2006. The Fed started lowering rates in earnest. And guess what? There's a recession announced a little bit later. And that's important to see. That's why it's so important to know what's going on with interest rates. Now, it says investors also continue to weigh rising tensions in the Middle East and what the situation could mean for global markets and trading. Now, this situation with Iran and Israel, it's a big deal. You've been watching oil price jump. Prices at the pump are always already jumping. Now, the American people have recently seen a pullback, like in the last couple of years or a year and a half, of fuel prices. But now they're on the way back up. And this is not during the summer. This is during a seasonally normal time for prices to be muted, right? Because of winter blends and fuel, things like that. Here's the point. The US consumer is so tapped and so done that even Dollar Tree, Big Lots, and other discount stores are feeling the pain. Home Depot, Lowe's saying the consumer has changed. Target and Walmart saying the exact same thing. So now, on top of all that, you're going to see rising gas prices, which means you're going to eventually see rising food prices and other prices because of that. You're going to see more consumers get laid off from their jobs. Layoffs are picking up. And then you're going to see the final crash. Now, the point is what are you doing about this? You're either getting ready for it and saving money, or you're out there blowing money to try and impress somebody you don't even have respect for. I hope that wakes some people up, because that is the truth in most cases. I hope you got something out of this. I hope you're preparing. I'm going to put a link down to my newsletter down below. And if you want to sign up for it, it's free. I hope you got something out of this. The Economic Ninja is out.